Welcome back to the deep dive. Today, we're really digging into Nestlé India Ltd, and we've got some very fresh insights straight from their latest reports released on July 24th, 2025.
That's right. And it's quite a stack of sources. We have the formal board meeting outcomes, the detailed unaudited financial results for Q1 ending June 30th, 2025,
Okay.
the company's own press release, and even the extraordinary general meeting voting results.
Ugh.
So it's a complete snapshot, both their recent financial performance and some pretty big strategic decisions.
Right. And our mission today really is to cut through all that corporate jargon you find in these official documents. We want to pull out the most important nuggets and, well, give you that crucial shortcut to being truly well-informed about a major player in the consumer goods space.
Exactly. We'll pull apart the numbers, look at what truly drove them, and then we'll shift focus a bit to the major corporate actions, leadership changes, that kind of thing. This deep dive should help connect the dots for you, hopefully giving you those aha moments.
All right, so to really understand where Nestle India is right now, we have to start with the fundamentals, the numbers. Let's peel back the curtain on their first quarter of financial year 2025-26, the one ending June 30th.
Absolutely. So Nestle India reported total sales of INR 574.0 crore for the quarter. Now, what's interesting here is the growth figure. Total sales growth was 5.9% compared to last year.
Okay, 5.9%.
Yeah, maybe seems a bit modest at first glance, but the crucial detail, the one they highlighted, is that the growth was volume-led.
Ah, right, not just price hikes.
Exactly. Which indicates, a return to real consumer demand rather than just relying on price increases. That's a much more robust sign of health for a company like this, especially now. Domestic sales growth was right behind at 5.5%.
That's a critical distinction, volume over price, definitely.
But how did this sales performance, impact the bottom line? Were they able to maintain or improve margins with all the market pressures? Good question. So the net profit for the period came in at INR 609.2 crore, and the earnings per share, EPS, which is always a key indicator, right? That was INR 6.84.
6.84, okay.
And we also saw EBITDA, earnings before interest, tax, depreciation, and amortization, that was at 21.7% of sales. That figure gives a clearer view of their core operational profitability, kind of stripping out some other factors. And these are all unaudited figures, standalone and consolidated, straight from the board's approval.
Got it. So with those numbers in hand, the next question is obvious. What actually drove this growth? Was it like across the board, or were there just a few standout categories pulling the weight?
The press release points to quite a significant shift. The chairman and managing director, Mr. Suresh Narayanan, specifically stated that Nestle India returned to volume-led growth pretty much across the business categories. 3 out of their 4 main product groups really bounced back: prepared dishes and cooking aids, powdered and liquid beverages, and confectionery.
Okay, 3 out of 4 showing volume recovery. Can you give us a bit more detail on those high performers? Like which specific products were hitting the mark with consumers?
Sure. Powdered and liquid beverages was a major driver. Strong double-digit growth there. Nescafe, for instance, didn't just hold its lid, it actually gained more market share.
How they manage that?
Seems like a two-pronged approach. Making coffee more accessible with affordable packs, but also expanding the premium end with Nescafe Gold and Roastery. Nescafe Ready to Drink also saw strong growth.
Makes sense. What else?
Prepared dishes and cooking aids, Maggie Nadles saw double-digit growth. Consumption trends looking positive there. Seems like even with tight budgets, those comfort classics like Maggie still do well.
Can't beat Maggie.
Apparently not. Masala and Magic also showed strong double-digit performance. Then, confectionery, high double-digit growth. Kit Kat was the biggest driver, especially in what they call urban markets.
Urban, right. That blend of rural reach and urban aspiration.
Exactly, gaining share there. MUNCH and Milky Bar also posted double-digit growth. And even Nestle breakfast cereals reported high double-digit growth, helped by that new MUNCH Choco Fills launch.
Wow, okay. So a lot of positive momentum on the growth side. But, it's never completely smooth sailing for these big companies, is it? What kind of headwinds did Nestle India face this quarter?
No, you're right. They definitely faced challenges. The quarter was impacted by elevated consumption prices across their commodity portfolio. Basically, raw materials cost more.
Right. Inflation's still biting.
Yeah, plus they had higher operations costs. This is because of that significant manufacturing expansion they did in the last, say, 7 or 8 months. The cost of actually growing their production capacity.
Scaling up costs money.
It does. And on top of that, higher finance costs because they had to borrow from commercial banks just to fund some temporary operational cash flow needs.
Interesting. So despite those immediate pressures, it sounds like maybe the outlook on commodity prices is getting a bit better. Is Nestle set up to benefit from that, or are those other cost issues still going to be a drag?
That's a crucial point. They did note stabilizing prices for edible oil and cocoa, and actually a declining trend in coffee. Milk prices are kind of stabilizing, maybe modest increases. Looking ahead, they expect coffee prices to stay range-bound, sort of at these current lower levels.
That's good news for them.
Definitely. And they think milk prices might decrease with a good monsoon and the flush season. So, yeah, this improving commodity outlook, if it holds, could certainly help their margins in the next few quarters. Maybe offset some of those operational cost bumps from the expansion.
Okay, moving beyond the specific products, the reports also give us a really interesting look at how different sales channels performed. And that tells its own story about, well, how people are shopping now.
Precisely. E-commerce kept up its strong growth momentum. It contributed, get this, 12.5% of domestic sales.
12.5%. Wow.
Yeah, driven particularly by quick commerce, those instant delivery services and new launches. This isn't just a number. It shows they're really adapting successfully to modern habits.
Absolutely. And what about the sort of traditional out-of-home market? That's often a good indicator of consumer confidence, right?
You've hit on a key area. It continued strong double-digit growth. In fact, it was the fastest growing business across their whole beverages and foods portfolio. And a notable milestone, Nestlé Professional hit 1,000 Retail One kiosks across India.
1,000. What are those exactly?
Things like Nescafe Corners, Maggie hotspots, Kit Kat break zones. It's about meeting consumers where they are, offering convenience and experience. It's not just about presence. And organized trade, supermarkets and such, also saw widespread growth, helped by store expansions and good in-store promotions.
And there's that interesting detail about exports, too. Something about Masala-e-Magic.
Yes, exports registered high double-digit growth. Across foods, coffee, instant tea, breakfast cereals, this was despite those commodity headwinds we talked about. And yeah, the launch of Masala-e-Magic in the UK is pretty noteworthy.
Why is that?
Well, it signals their confidence in taking a locally successful product international, tapping into the Indian diaspora, maybe broader South Asian food trends over there. It's an interesting expansion for that brand.
You know what really stands out to me in these reports, maybe unexpectedly, are those unique internal initiatives they highlighted. It goes beyond just the sales figures, touches on the company culture.
Indeed, sometimes you find those aha moments revealing deeper values, right?
Sure.
Nestle India's pet food business did really well, mainly driven by the cat portfolio, Purina Felix, Purina Friskies.
Okay.
But complementing this, they launched a staff pet feeding policy and, get this, paternity leave.
Paternity leave. Seriously.
Yep. Offering 2 days leave for employees to care for their pets. It's quite innovative. And beyond just being a feel-good story, it probably reflects a strategic move towards, holistic employee well-being. That can be a really powerful tool for attracting and keeping talent these days.
That's actually fascinating. Okay, so this deep dive isn't just about that financial snapshot, is it? There were some really significant corporate shifts announced on the very same day as these results.
That's correct. It was a big day. The board of directors meeting on July 24th didn't just approve the financials, they also greenlit a key leadership transition. Mr. Suresh Narayan, who's been the chairman and managing director for a long time, guided the company for years.
Yeah, a very familiar name.
Right. He'll relinquish his office upon his retirement on July 31st, 2025.
Wow. So with such a major leadership change, what does this mean for the company's future? Who's stepping into those pretty big shoes?
Mr. Manishteri has been appointed as the new chairman and managing director of the board. That's effective August 1st, 2025. So, yeah, it really marks a new era for Nestlé India, a fresh perspective coming in after a period of really strong growth and strategic moves under Mr. Narayanan.
Okay, new leadership. And then on the shareholder side, there was also an extraordinary general meeting, an EGM, held that same day, with some big approvals impacting investors directly.
Yes, like I said, a very busy day for Nestlé India. The members of the company, at this EGM held via video conference, approved everything on the agenda with a required majority. The most significant item was the approval to issue bonus equity shares.
Bonus shares, how does that work again?
It's in a 1.1 ratio. So, one bonus equity share for every one fully paid-up equity share someone holds. It basically involves capitalizing a sum just under 96.42 crore out of the company's retained earnings. It's often seen as a sign of a company's financial strength and confidence, distributing profits back to shareholders without a cash outflow. by increasing the number of shares.
Right, increases liquidity too, potentially. And the shareholders were strongly behind this.
Overwhelmingly. For the bonus share issue, a striking 97.76% of the total valid votes were cast in favor.
That's a huge majority.
It is. The EGM also approved increasing the authorized share capital, basically the maximum amount of share capital the company is allowed to issue, from 100 crore to 200 crore. That got 97.78% approval. So yeah, very strong mandates from shareholders, showing clear support for the capital strategy and the company's direction.
Finally, just looking at the bigger picture then, Mr. Narayan also reflected a bit on Nestle India's performance over the last decade under his leadership. Seems like it sets quite a benchmark for the incoming team.
Yeah, if we connect this to the bigger picture, the numbers he cited are pretty impressive. Over the past 10 financial years, Nestle India's revenue grew at a compound annual growth rate, or AGR, of 10.3%.
10% a year, consistently.
Pretty much. Profits after tax soared by 490% over that decade. Sales rose by 150%, and market capitalization grew 3.9 times. This all resulted in a total shareholder return, TSR, which includes both share price gains and dividends, of a really robust 17% CGR. That's a very strong foundation for Mr. Tiwari to build on.
Wow. Okay, so this deep dive really shows all the different layers, doesn't it? You've got the quarterly sales, the operational challenges, the channel performance, those unique employee policies, and then these huge leadership and capital changes. It's definitely a snapshot of a company in motion.
It truly highlights how a company like Nestle India has to balance those immediate market pressures, costs, consumer demand, with that long-term strategic growth and shareholder value. And doing it all while navigating a critical leadership transition and setting the stage for the future with moves like the bonus issue.
So for you, our listener, hopefully this deep dive gives you a comprehensive picture of where Nestle India stands right now and, well, the pretty exciting direction it seems to be heading.
Yeah, and it raises an important question that may be something for you to think about. How will Mr. Manish Tiwari, the new chairman and MD, take this incredibly strong foundation and build on it? How will he address that evolving consumer landscape, the market dynamics, especially given these recent strategic moves like the bonus shares and the capital expansion? It'll definitely be fascinating to watch what new strategies emerge and how they keep growing in such a dynamic market.